America's political and economic debate gives us two choices: more bailouts or more budget cuts. If we choose neither, we still get one or the other, or just more of the same. We are told that we have a clear choice, but America is divided. Choosing sides only makes things worse. Either way, we get more of the same. Most of us already agree that our banking system is a problem, but our government is either unwilling or unable to solve the problem. Solving the problem of the banking system will require Americans coming together to learn key lessons of American history. After the United States won the Revolutionary War, there was division, not unlike today. There was a fierce debate between Alexander Hamilton on one side and Thomas Jefferson on the other. Hamilton wanted to establish a national bank to finance new American industries and manufacturing. Jefferson wanted no national bank, and he wanted the United States to be an agrarian society that imported manufactured goods. George Washington supported Alexander Hamilton. Washington appointed Hamilton as the first Treasury Secretary, Congress approved, and the First National Bank was a success. In addition to financing industry and manufacturing, the First National Bank financed infrastructure, including forts and Navy ships, to protect the newly formed United States from its enemies. The United States prospered. In spite of this, Jefferson continued to oppose the national bank as unconstitutional. It was finally forced to shut its doors in 1811. The United States economy fell, and we were attacked and nearly destroyed by the British in the War of 1812. British invaders even burned down the White House. Fortunately, a second national bank was established in 1817. The second national bank gradually put the United States back together again, though it too was opposed primarily by Southern plantation owners who continued to do business with the British. So the fight continued, and it went all the way to the Supreme Court. The Supreme Court ruled that a national bank is constitutional. The Second National Bank promoted the general welfare, and the United States prospered once again. Unfortunately, the Second National Bank was shut down in 1836. The United States economy immediately collapsed into a deep depression, and with no national bank, multitudes of independent banks sprang up, each with their own currency. There were thousands of different currencies in circulation. Economic chaos finally led to civil war in 1861 when Abraham Lincoln became the 16th President of the United States. Abraham Lincoln solved the problem by creating not a national bank, but a national banking system, which was easily the most successful banking system ever created. Lincoln also created what soon became the Bureau of Engraving and Printing to print the first greenbacks, which are still legal tender today. Greenbacks were used to finance the victorious Union Army and to turn the United States into the greatest industrial superpower the world had ever seen, even while it was split in half. However, enemies of national banking were still not finished. They instituted what was called specie resumption in 1875. Specie is precious metal coinage. Resumption meant that every dollar in circulation had to be matched by an equivalent amount of specie in the United States Treasury. In other words, if there's a dollar out there, then there has to be a dollar's worth of gold or silver sitting in a vault. Since the amount of gold and silver in the Treasury fell far short, millions of dollars were taken out of circulation and national banking shrank. This led to a series of panics and depressions because there was not enough money to go around. As Americans would put their money in local banks would take the money to bigger banks on Wall Street, hoping to earn some interest. Wall Street banks would use the money to speculate. Sometimes they would lose big. When the news came, hordes of Americans would run to their local banks all at once, trying to withdraw their money, only to find locked doors and their money all gone. Enter the Federal Reserve. Originally, the Federal Reserve was created to prevent bank runs. If a bank lost everybody's money on Wall Street, then they could get an emergency loan from the Federal Reserve to stay open. This would hopefully prevent Americans from panicking. While this was not necessarily a bad idea, it was a lousy compromise. Instead of creating the Federal Reserve, specie resumption could have been repealed. Furthermore, banks could have been prevented by law from speculating with other people's money. These things were not done until 20 years later, but it was too late. Along with the Federal Reserve came the creation of the Internal Revenue Service at the Treasury. The Internal Revenue Service reduced the United States Treasury to little more than a tax collector. All the while, the Federal Reserve was allowed to operate independently, and it soon grew into the kind of monster that opponents of the first and second national banks would have legitimately feared. By 1922, the Federal Reserve began to purchase the debt of the United States. The United States now owes more money to the Federal Reserve than anyone. The Internal Revenue Service collects more and more taxes to pay more and more debt with interest to the Federal Reserve. Furthermore, whenever the Federal Reserve wants even more money, it simply orders the Bureau of Engraving and Printing to print it and deliver it. The Bureau of Printing and Engraving is paid by the Federal Reserve only the cost of printing, which is pennies on a $1 bill and the same pennies on a $100 bill. Finally, the Federal Reserve gets to be the first to spend every newly printed dollar. Naturally, this did not work. The Wall Street speculators took even bigger risks because they believed they would get bailed out with Federal Reserve money if they lost. They lost in 1929. The entire system failed to work at all, and the Great Depression began. When Franklin Roosevelt became president in 1933, the United States was in a free fall. Roosevelt immediately took a series of extraordinary measures, including a number of executive orders and reforms, including, finally, the end of specie resumption and the beginning of the famous Glass-Steagall legislation. Glass-Steagall made it illegal for banks to speculate with other people's money. Every bank had to become either a commercial bank or an investment bank. Only investment banks could speculate, and they had to use their own money. Commercial banks that took deposits from ordinary people had to leave the money alone. This arrangement gradually brought the United States out of the Depression and helped us to win World War II. Unfortunately, the Federal Reserve, though temporarily weakened, remained intact. This allowed the enemy within to continue operating. The beginning of the end finally came in 1999 when Glass-Steagall was repealed. This allowed banks to speculate with other people's money once again. With no meaningful regulations in place, the national banks effectively became private. Many private banks began to merge and create huge entities that are now known as too big to fail, because if they fail, the fallout would collapse the entire system. Without controls like Glass-Steagall, these huge private banks, along with the Federal Reserve as their partner, became a financial empire apart from and above the boundaries of constitutional government. They have an additional stranglehold on the American people because they are the biggest contributors to the election campaigns of our representatives on both sides of the aisle. In other words, they virtually own all of us. This arrangement obviously does not work either. As many Americans know, the end came with the collapse of 2008. This collapse was caused when private banks intentionally overvalued real estate and used Americans in pursuit of the American dream of home ownership. Individual mortgages were overpriced, sold to the masses, and bundled into what are called mortgage-backed securities. Mortgage-backed securities are simply pieces of paper that represent a claim on all the included mortgage payments. Countless mortgage-backed securities were created out of thin air and sold to other banks and speculators. As the economy weakened, more and more mortgages went into foreclosure. So the value of mortgage-backed securities fell far below their price. Banks that owned too many mortgage-backed securities became insolvent and started a chain reaction collapse. So, the Federal Reserve stepped in and simply did what it was created to do. It bailed out the banks by buying these bad securities with hundreds of billions of newly created dollars backed by the future tax revenues of the American people. In other words, a shell game was played in which the American people covered the bank losses out of their own pockets. It is now estimated that the American people will pay an additional $200 billion to keep private banks and the Federal Reserve in business. And there have been no meaningful changes in the way our broken financial system continues to do the same thing over and over again. One question we might ask: where is the Supreme Court? How do we get control of the system before America is destroyed for good? If we take the lessons from history, it should be obvious to anyone that the Federal Reserve private banking system that rules and ruins the land is unconstitutional. Clearly, it should be calmly reorganized to act within the boundaries of constitutional government as a third national bank, whose only concern is to promote the general welfare with credit for economic development, manufacturing, and reconstruction we desperately need. If jobs are the issue, that is the only guaranteed solution. Take down the failed private banking Federal Reserve and put Americans back to work building America.